Asia is still the place to put your money, and that's according to ING Investment Management's quarterly survey of investor sentiment released today. Not surprisingly, investors want to believe in the Asian growth story, but risk aversion remains high. Let's get to Paul Klug, ING's regional general manager, who joins us in Hong Kong. Paul, are investors back in the market in a big way, back to pre-Lehman days, or are they still sitting on the fence?
Well, I think the sentiment survey that we just completed shows that they're not sitting on the fence, but they are a bit more cautious than they were in previous quarters. Investor sentiment remains high. It's double what it was 4 quarters ago at the depths of the crisis. And at this point, it's in an optimistic but not excessively optimistic territory.
Risk appetite remains lackluster, apps with the tide changes with the data that we get from the various economies?
I think it remains optimistic, but a little cautious. We've seen a period of consolidation during this last quarter as some of the markets that had excessive run-ups last year have started to consolidate. But basically, the optimism is driven by strong confidence in domestic economic expansion, principally in China and India, and secondarily by export-driven expansion in Hong Kong, Singapore, and also Taiwan. What remains to be seen is that export expansion being driven by domestic Asian regional expansion, or is it being driven by additional growth in the U.S. and Europe?
Can I ask you?
So it looks like investors. Go ahead.
Yeah, sorry. I just wondered, on that note, do you have a way to judge if investors are, in this survey, less optimistic about the U.S.'s ability to drive Asia than the previous survey? Or?
We do. In the previous survey, over 50% of the investors felt very confident in U.S. economic expansion this year. What we found is that dropped rather significantly. They still believe it will happen, but they're expecting it to happen after beyond 12 months, as opposed to most people last quarter expected it this year.
Paul, where are people pumping their money in terms of asset class? I mean, what are the so-called safe investment choices? We had BNP CIO in the studio today. He says equity is a place to be right now.
Well, I would agree equities are a very good place for a variety of reasons. One, I don't think the markets are at excessive valuation levels. Number two, with inflation expected and rising interest rates expected, equities will participate well with that type of economic climate. When you look broadly at where Asian investors have allocated their assets, principally it's first to cash, secondly to stocks, and thirdly to real estate. And our investment survey shows that there's no change in that behavior in this quarter.
Kirby was asking you about sentiment in the U.S. How about sentiment in emerging markets? Does it look like it's pretty mixed? Investors do seem optimistic in nations like Malaysia, the Philippines, but sentiment possibly impacted by political concerns in Indonesia and Thailand.
Well, we saw investor sentiment overall at a high level, but not an excessive level. But there were differences. You saw India at being very, very optimistic, and you saw places that have political challenges, such as Thailand, being a bit less optimistic. But nonetheless, I think even those changes were within a very positive outlook for the rest of the year.
What's key? What are the key indicators investors are looking out for?
The fundamental thing that people are looking for is what's going to happen with the U.S. economic recovery. And that's going to be driven, in our view, by 3 things. One, a meaningful change in the unemployment rate. Number 2, by general economic growth. And number 3, by a housing recovery. And until those 3 things happen, we don't anticipate there will be any significant changes in interest rates in the U.S. And we won't really see full recovery until all of those happen.